We haven't really had a lot of luck with Canada. I think Canada could be one where they'll just pay tariffs.
Potato chip aficionado, they might remember that back in around 2017, so about 7 years ago, there was the great potato chip shortage.
If we're not able to open markets to the United States, we would have to destroy a portion of their potatoes, and it would be very unfortunate, and nobody wants that.
Relationships there, anything that would impact that is obviously of huge concern.
We'll come out stronger for it in the end. In the meantime, it could be painful.
Imagine walking into your favorite diner, ordering the same plate of fries you've been eating for years, only to find the portion smaller, the price higher, and the taste completely off. You ask the waiter what happened, and they just shrug. The truth? Over 140,000 tons of Canadian potatoes vanished from U.S. shelves in less than 4 months. No warning. No explanation. One of the most stable food trades in North America simply collapsed overnight. And while Americans are now paying $5 for limp, soggy fries, Canada isn't begging to come back. In fact, they quietly walked away, turned to Asia, and signed multi-billion-dollar deals, without even looking over their shoulder. This isn't just about fries. It's about how one of the closest trade partnerships in the world fell apart with almost no headlines. A silent breakup between neighbors, reshaping global food supply chains in ways few people even realized. What really happened here? Why did the U.S. push away its most reliable potato supplier? And how did Canada turn that crisis into an opportunity that might change trade forever? It all started with a single decision out of Washington. On April 2nd, 2025, the United States government quietly dropped a 35% tariff on Canadian potatoes. No big press conference, no warning, no negotiation, just a sudden tax that turned North America's most reliable food trade into chaos overnight. The official excuse? Trade fairness. But the reality hit Americans like a sucker punch. A bag of premium Canadian potatoes that used to cost $22 suddenly shot up to $30. A plate of fries that had been $3.50, now it was closer to $5.25. And this wasn't some luxury item. This was the side dish that millions of Americans order without even thinking. Fries became more expensive than ever, while tasting worse than ever. Restaurants scrambled to adapt. Instead of Prince Edward Island's golden, crispy potatoes, they had to swap in cheaper U.S. spuds. But here's the catch. They didn't fry the same. Customers noticed instantly, complaining about limp fries, uneven color, and that strange chemical aftertaste that no amount of ketchup could hide. Diners in Wisconsin, Michigan, Minnesota, they all said the same thing. The fries just weren't right anymore. And for small mom-and-pop diners, this wasn't just a flavor problem, it was survival. One restaurant owner in Fargo admitted, "We went from serving 3 plates of fries for $10 to barely 1.5. Our margins didn't shrink. They vanished." But here's what shocked everyone most. Canada didn't protest. They didn't file complaints. They didn't beg Washington to roll back the tariffs. Instead, the potatoes just stopped coming. Over 140,000 tons vanished from U.S. shelves in just 4 months. No fight, no headlines, just a silent retreat. And that's when the U.S. realized something far more dangerous than tariffs was happening. Canada wasn't preparing for war. They were preparing to walk away. But why didn't Canada fight back? And where did all those potatoes go? The answer reveals a strategy so clever it caught Washington completely off guard. When most countries get slapped with a tariff, you expect fireworks, angry speeches, counter-tariffs, threats of retaliation. But Canada didn't play that game. There were no heated press conferences, no warnings to Washington, not even a whisper of revenge. Instead, something far more unsettling happened. Canada simply walked away. One day, U.S. importers were used to seeing trucks loaded with Prince Edward Island potatoes rolling across the border like clockwork. The next, the trucks just stopped showing up. Warehouses that were once stacked to the ceiling with Canadian potatoes stood half empty. Contracts that had been renewed every season without question were suddenly being cut short or left unsigned. Major processors like McCain Foods and Vanish Farms, who once shipped thousands of containers of frozen fries into the U.S. each month, quietly scaled back their deals. No announcements, no drama, just fewer shipments, fewer trucks, and fewer farmers planting crops for their biggest buyer. In provinces like Prince Edward Island and New Brunswick, farms slashed their acreage by 15 to 25%, not because of bad weather, not because of pests, but simply because demand from America evaporated overnight. For Canadian farmers, it was a painful shift. Tractors sat idle. Cold storage units stayed empty. Generations who had depended on the potato pipeline to the U.S. were suddenly left wondering if that era had ended for good. But here's the part that Washington completely missed. Canada wasn't panicking. They were planning, and while American customers were sitting in diners, pushing away plates of limp fries and asking what happened, Canada was already sketching out a new playbook, one that didn't depend on the U.S. at all. Because Canada realized something that day. When your biggest customer taxes your product like it's poison, maybe it's time to stop begging for the sale. Maybe it's time to find better customers, and that's exactly what they did. While the U.S. stumbled, Canada pivoted hard, keeping prices stable at home and striking billion-dollar deals abroad. But the way they pulled it off? That's the part that stunned everyone. While Washington was flexing with tariffs, Canada reached for something far more powerful: strategy. Instead of wasting time in a shouting match, Ottawa quietly reorganized its entire potato economy. And the way they did it stunned everyone watching. First, they looked inward. If the U.S. didn't want Canadian potatoes, Canadian families would get them instead. Farmers and processors began retooling for the domestic market, downsizing bulk exports and repackaging potatoes into smaller 5-kilogram bags for grocery stores and local co-ops. Overnight, potatoes that were once destined for American diners were sitting on Canadian shelves, steady, affordable, and reliable. And here's the kicker. While Americans were paying $30 a bag, Canadian families saw almost no change at all. Prices in Canada held steady at around $4.50 to $4.99 per bag, thanks to government subsidies and smart market adjustments. For struggling households, that was the difference between stretching every dollar and putting a full dinner on the table. Even better, Canada made sure that surplus crops didn't go to waste. Instead of letting warehouses rot with unsold potatoes, Ottawa redirected thousands of tons into food banks, school lunch programs, and community kitchens. In just one quarter, over 12,000 tons of excess potatoes were delivered into low-income food programs across New Brunswick and Manitoba. For many families, that wasn't just a statistic. It was dinner on the table during some of the hardest economic months in recent memory. And while all of this was happening, Canada kept its cool. No angry sound bites. No trade war headlines. Just quiet, calculated moves that protected its farmers, helped its citizens, and avoided the chaos playing out south of the border. But here's where it gets really interesting. Canada wasn't just stabilizing at home. They were also opening doors abroad, because when your biggest buyer turns into your biggest headache, the smartest move isn't to fight them, it's to replace them. And that's exactly what came next. Billion-dollar deals with Asia that would change the game forever. While Washington was busy taxing fries into cardboard, Canada was busy signing pens on billion-dollar contracts. Instead of chasing after an unreliable neighbor, Ottawa pivoted east. And the results were staggering. In early 2025, Canada inked a $1.6 billion agricultural deal with Japan, South Korea, and Indonesia. On paper, it was about potatoes. But in reality, it was about sending a message. Canada wasn't begging to come back. They were moving on. The numbers speak for themselves. Prince Edward Island, the small province known worldwide for its perfect fried potatoes, shipped $8 million worth of fresh potatoes to Indonesia in 2024 alone, with shipments climbing higher every quarter. Thailand stepped in as Canada's largest non-U.S. importer, snapping up millions in both fresh and seed potatoes. Even Caribbean nations like Trinidad and Panama were writing checks worth over $13 million each. But this wasn't just about exporting crops. Canada used these deals to build new infrastructure at home. In Charlottetown, PEI, one freezing facility expanded after signing with a Japanese distributor. They added a brand new processing line, created 45 full-time jobs, and began purchasing more potatoes from local farmers, including the so-called ugly gray 2 potatoes that used to be tossed aside or sold as livestock feed. Now, even those imperfect spuds were finding their way into profitable export shipments. And here's the genius part. These new markets weren't just about selling fries. They were about building resilience. Canada had learned the hard way that relying on one buyer, especially a buyer that flips policies every election cycle, was less business and more hostage negotiation. By expanding across Asia and the Caribbean, Canada wasn't just replacing lost sales. They were future-proofing their agricultural industry against the next tariff tantrum out of Washington. For Canadian farmers, this was more than a rebound. It was a revolution. Instead of being tied to one market, they were suddenly part of a global network. Instead of being trapped by U.S. politics, they were free to look elsewhere for growth. But even as Canada celebrated billion-dollar contracts and shiny new processing lines, there was still one massive hurdle standing in the way. Because selling fries to Tokyo isn't the same as trucking them to Buffalo, and the hidden costs of this global pivot threatened to slow the victory lap before it even started. On paper, Canada's pivot to Asia looked flawless: billion-dollar contracts, new jobs, and booming exports. But in reality, shipping potatoes halfway across the world isn't as simple as signing a deal. Unlike the short, reliable truck routes from Prince Edward Island to New York or Minnesota, Asia presented a logistical nightmare. The first problem? Cold chain shipping costs. Trucking a load of potatoes to Buffalo was cheap and fast, but sending the same container to Tokyo or Jakarta, that cost 20 to 35% more per ton, not to mention weeks of transit time. Every extra mile meant higher prices, tighter margins, and more risk that shipments would arrive spoiled or delayed. Then came the regulatory walls. South Korea, for example, agreed to buy Canada's frozen fries, but still blocked fresh potatoes due to strict quarantine rules. That meant Canadian farmers couldn't simply export their raw harvests. They had to rely on big processors with expensive freezing facilities. Smaller farms, without the resources to process or freeze their crops, were left stranded, dependent on giant corporations deciding who shipped and who didn't. Even worse, the global shipping infrastructure wasn't ready for the sudden surge. Canada lacked direct cold chain routes to major Asian hubs, forcing exporters to cobble together longer, more expensive routes through multiple ports. That meant longer shipping times, higher insurance costs, and constant scheduling headaches. For small and mid-sized farms, the math just didn't work. Diversification was smart, but without the scale of a giant like McCain Foods, it often felt like waiting for a boat that only sails once a month. The result was a split reality. Large multinational companies were thriving, signing flashy contracts, and opening new production lines. But on the ground, many smaller Canadian farmers felt left behind, squeezed between falling U.S. demand and costly new export markets they couldn't fully access. Oh yes, Canada had pivoted. Yes, they had deals on the table and global buyers lined up. But the truth was far messier. The rebound wasn't instant. It was complicated, expensive, and uneven. And for every farmer celebrating a new Asian shipment, another was quietly wondering if the global pivot would leave them out in the cold. And this is where the bigger picture comes into focus, because beneath the contracts, the tariffs, and the soggy fries, this wasn't just about potatoes anymore. It was about trust, and whether one of the closest trade partnerships in the world had been permanently broken. By mid-2025, the numbers told a story louder than any press conference ever could. Canadian potato exports to the U.S. had collapsed by nearly 42%, a level of decline not seen since the 1980s. And it wasn't just Canada that felt the sting. Overall, U.S. potato imports dropped by almost 20%, leaving American restaurants, diners, and families caught between skyrocketing prices and shrinking quality. But the real issue wasn't just money. It was trust. For decades, the potato trade had been more than business, it was ritual. From Minnesota diners to Michigan cafeterias, Americans relied on Prince Edward Island's steady stream of potatoes the way they relied on Tuesday night football. It was consistent, dependable, and never in doubt. And then, in one sudden move, that reliability was shattered. What made it worse was the silence. Canada didn't retaliate, didn't threaten, didn't even slam the door. They just stopped knocking. The trucks didn't arrive, the contracts didn't renew, and the shelves slowly emptied. To the average customer, it felt like their fries had simply disappeared. But to trade analysts, it looked like something even more dangerous. Exhaustion. Because when a partner gets taxed like an enemy, they don't always fight back. Sometimes they just walk away. This wasn't a dramatic trade war filled with fiery speeches and flag-waving. It was something far more unsettling, a quiet retreat. Canada shifted its focus, built new alliances, and never looked back. And Washington, still caught up in its tariff politics, failed to notice the deeper consequence, the slow erosion of a partnership built on decades of mutual trust. The U.S. thought it was protecting its farmers. Instead, it may have permanently damaged one of its closest, most reliable trading relationships. And as one policy brief from July 2025 warned, short-term protectionism may yield political optics, but long-term reputational damage is harder to fix. Because once trust fades, it rarely comes back quickly. Sometimes it doesn't come back at all. And that leaves us with one final question. Was this really just a fight over fries? Or was it the quietest breakup in North American trade history? What started with a potato tariff ended with something much larger. The unraveling of trust between two neighbors who once relied on each other like family. In just a few months, 140,000 tons of potatoes vanished from U.S. shelves, prices skyrocketed, and the food on American tables literally changed flavor. But Canada didn't beg. They didn't retaliate. They didn't even argue. Instead, they redirected their crops to their own citizens, fed their communities, and then signed billion-dollar deals with Asia. While Washington played politics, Ottawa played strategy, and won, the real shock isn't the soggy fries or even the billions lost in trade. The real shock is how quietly it happened. No declarations, no dramatic trade war, just one of the closest partnerships in the world slowly dissolving into silence. A silent breakup, maybe the quietest in North American history. And now the big question, can trust ever be rebuilt? Will Canada return to the U.S. table, or is this the moment they've finally moved on for good? Because when trust disappears, it doesn't always shatter loudly. Sometimes it just fades between empty warehouses, canceled contracts, and fries that never taste the same again. Tereso, I'll leave it to you. Was this just a fight over potatoes, or the first sign that the U.S. is losing more than trade? It's losing its closest partners. Drop your thoughts in the comments below. And make sure to subscribe, because the next chapter in this global power shift is already unfolding, and you won't miss it.